Hi friends, welcome to A to Z Learning channel. Today in this video, we will help you understand the key metrics that you can use to compare different banks in the market. There are all type of banks and sometimes it gets really hard to choose which bank is right for you to invest your hard-earned money. There are number of metrics that banks publish every time they publish their quarterly, annual, semi-annual results. But it gets so confusing because every bank is very good in terms of highlighting, presenting a narrative that suits them the best. They'll highlight only those metrics, those performance benchmark, which make them look really good. But I wish there was a standard way of looking at and comparing these banks so that you can choose which one ticks the boxes for you where you can invest your money. So your search for that one place where you can go and look at some of the key metrics about the bank performance and then decide which bank you want to choose for your investment is over. That wait is over. This video that we are sharing with you today will provide you that answer. We will share with you basically the 5 key metrics. Yes, it's not a long story. It's not a complex way of looking at how to compare bank. We will simply look at 5 key metrics that will help you assess which bank is the strongest, which bank could be the place that you can choose to invest your hard-earned money. What are these 5 metrics? So these 5 metrics are, first one, net interest margin. What is net interest margin? This is basically the interest, the difference between the interest that banks earn and pay. As you know, when you deposit your money with the bank, you get interest as a customer, and that is the kind of interest that bank pays. At the same time, when bank lend that money to someone, give that as a loan to their customer, they earn interest. So they earn interest on the loans and they pay interest on the deposits. Whatever is the difference between these two type of interest is called net interest margin. If net interest margin is good, bank is seen a strong bank. Typically, a good level of net interest margin for any bank is considered about 3%. So if 3% is the net interest margin or any number which is higher than 3%, bank is seen to be doing really well. Second metrics, return on assets. This metric basically shows how profitable bank is in terms of using its assets to generate revenue. So when banks get their deposits, they have the cash to lend, to give it as a loan. How good they are in terms of lending it and at what rate of interest they are lending it, it all decides that how good they are in terms of using their assets to generate revenue, and that is measured through return on assets. Typically, a good level of return of asset is if the return of asset is more than 1% is seen a good level of return on assets. Anything that is less than 1% return on asset, bank has few questions to answer there. Okay. Third metric is the CASA ratio. CASA stands for current account and saving account. So banks collect their deposit through current accounts that they open for their client and the saving account that they open for their client. And that's the kind of primary source of their money coming in. So if CASA ratio is good for any bank, means that's the kind of most efficient way of raising cash, raising deposit, having money for the bank. Typically, if CASA ratio is 35% or higher, that is seen a very good level of CASA ratio. So that is our third main metrics that we will look at when we compare the banks in India. Let's move to the fourth metrics, which is capital adequacy ratio. As you know, banks lend money and then sometime banks are unable to recover that money from the clients who they have given it as a loan. So capital adequacy ratio helps them make sure that they have they've always got the enough capital, even if there are bad loans, even if there are delay in payments, they are able to still meet the capital requirement of their customers, of their regulators, and the capital requirement they have to have as per the RBI guideline. So capital adequacy ratio is a very important metric to assess what is the level of capital bank has in relation to the risk of assets and liabilities that they have. Typically, a good level of capital adequacy ratio is any number which is higher than 12%. If a capital adequacy ratio is less than 12%, bank is a risky bank. It would be considered as something that in a bad situation, they may not be able to fulfill the demand that their depositors may have. So capital adequacy ratio of a minimum of 12% is basically 12% is seen as a good level. Now let's talk about the last but not least important, the fifth metric called net NPM. Bank is in the business of giving loan. So when you give loan, some people are unable to pay it back because their businesses for which they took the loan hasn't survived, or if somebody has taken as a home loan, they are unable to pay it back because they have lost the job or their expenses have gone up or their income has reduced. So there are a number of reasons for which a asset for the bank becomes a non-performing asset. Means either they are not able to pay the interest on that or they are unable to return that money. So net NPA is the again very important metric that you should look at to see what is the book of business. Does the bank have too many bad loans in their books? And if that's the case, that net NPA will be very high. Typically, if net NPA is maintained below 1%, yeah, if it is maintained below 1%, it is considered very good. Any number which is higher than 1%, you start to get into that riskier territory, that your NPA levels are are at the level where it may be difficult for you to survive as a bank. So I hope the simple description of the 5 key metrics that you could use to compare the banks that you're looking to invest is helpful. If you're liking the content of this video, I would urge you to please press the like button and share this video with your friends and family. If you've not subscribed our channel A to Z Learning as yet, I would again request you to please subscribe our channel and become part of our viewers family. So having understood the key metrics that one can use to compare bank and also understood what is the typical good level of those metrics, now the next question comes is that let's apply these metrics and see how our main banks are doing. And that's where we will go next. It has come on your screen. There are 2 sets of table and there are lots of numbers here, but let me kind of simplify it for you. Let me kind of describe it in a simple manner so that you can follow all the numbers that are shown on this page that's there on your screen. So focus on the left hand side of the table, which shows the data which is for the year ended as on March 2021. So all the banks have recently come up with their end of March result, and this table on the left shows the outcome of 10 main banks based on those latest results. The first line in this table is the good level that we have just talked about. For example, we talked about net interest margin should be 3% or higher, return on assets should be 1% or higher, CASA ratio should be 35% or higher, capital adequacy ratio of 12% or higher, or net NPA of 1% or less than that. So those are the kind of good level captured for you on in the first row of that table. And then we have looked at 10 main banks: Kotak Bank, HDFC Bank, IndusInd Bank, Yes Bank, Bandhan Bank, RBL Bank, IDFC First Bank, Axis Bank, SBI Bank, and ICICI Bank. So these are the 10 banks that we are going to be looking at. And you would see that the some kind of cells are kind of shaded as a red. The reason they are shaded as a red, because whatever is the good level for each metric that we have defined in the first row of this table, if a bank's outcome, if a bank's score is less than that good level that we have defined, then we have highlighted that cell for that bank as a red. So some of the key observation before we kind of go through individual banks. First of all, there is only one bank out of these 10 banks who has absolutely no red flag across these five metrics. Yes, that is the second row in this, which is HDFC Bank. HDFC Bank is the only bank out of these 10 banks which have absolutely no red flag on these five metrics. Their net interest margin is 3.96, which is higher than 3%. Their return on asset is 1.82%, which is higher than the 1% that we have prescribed. Their CASA ratio is also higher than 35% at 46. Their capital adequacy ratio, which should be 12% or higher, theirs is 19%. And the net NPA, which we say should be less than 1%, for HDFC Bank, it is 0.4. So this is the only bank in these 10 banks which is absolutely green, absolutely clear across, front runner on these things. So they really kind of stand out as a bank, as a performing bank. They have absolutely no issue. Then look at the kind of other end of the uh, chart on this particular table. Which is the bank which has got the most red flag? Again, you will not be surprised. Yes Bank, which has got four red flags on these five metrics. The only metric that they are not red flag is their capital adequacy ratio. Last year, they did come up with their follow-on follow-on shares through which they collected large sums of money, and therefore their capital adequacy ratio is at 18%, and therefore they are fine on that. But all other metrics, whether it is net interest margin, return on assets, they are still loss making. So they have a negative return on asset, though it is improving year on year. Their CASA ratio is 26, probably the lowest in the industry. And their net NPA are also almost touching 6%, which is highest in the industry. So Yes Bank, on these five metrics, 4 out of the five metrics, they are doing terribly. They're doing really, really badly. Again, should not be a surprise. That's the reason that bank investment from an investment perspective is not on the forefront of people's mind. Then the other thing where the banks where we have got three kind of red flags. Those banks are RBL Bank. RBL has got a red flag on return on asset, which should be more than 1%. They have got only 0.54. CASA ratio 35% is considered good. They have got only 32. And their net NPA is also 2.12%, which should be less than 1%. So RBL Bank is a another bank which is an issue. Then Axis Bank. Axis Bank has got issue in terms of net interest margin, which is only 2.94. Return on asset is only 0.71, and their net NPA is also more than 1%. Then the ICICI Bank, which has got three red flags. 2.95 of net interest margin. Their capital adequacy ratio is 11%, which is just under the good level of 12. And their net NPA is also 1.14. So they are marginally over on these two parameters, capital adequacy ratio and net NPA. But as we said, we are comparing here, looking at the good level. ICICI Bank scores three red flags. So from a good side, HDFC Bank stands out really, really strong. But Yes Bank, RBL Bank, Axis Bank, ICICI Bank are on the lower end of the spectrum. All other banks are pretty much in the mix. So, for example, Kotak Bank has got an issue of only net NPA they need to work on. All other metrics are really, really strong. In fact, their net interest margin is 4.4. Any number of net interest margin of more than 4% is considered very, very strong. But they have got net NPA issue. IndusInd Bank has got an issue of return on asset. They have got just under 1%, 0.93%. All other metrics look really strong for them, but return on asset looks lower. Bandhan Bank looks very strong on net interest margin. They are the industry leader in terms of net interest margin with a net interest margin of 7.8%, which is very, very strong. In fact, all the parameters, all the metrics, they look really good except the net NPA, which is 3.5%, very, very high. IDFC First Bank, very, very strong across all the measures, but they are looking weak on return on asset of less than 1%, and they're also looking weak on net NPA, which is 1.86. So hopefully this summary based on the March 2021 number is helpful for you to determine who are the stronger bank, who are in the middle, and who are at the bottom end of the performance on these key metrics. Now let's look at in the final few minutes what has been the journey over last 1 year, and that's where the table on the right on your screen comes into play. Table on the right is basically where these banks were as on March 2020. So as on March 2020, Kotak, HDFC and IndusInd Bank were all green. They had absolutely no red flag. But this time around, though HDFC Bank remains very, very strong, so very good. But IndusInd and Kotak, which were all green, and in fact, sorry, Bandhan Bank I should also add, Bandhan Bank was also all green last year. But this time around, Kotak, IndusInd, and Bandhan, they all have got at least one red flag. So net NPA is an issue for Kotak Bank, which has gone up, and also for Bandhan Bank, which has gone up. For IndusInd Bank, it's the return on asset, which was 1.45% last year, is now down to 0.93. So that's where they have the issue. Yes Bank was an issue at the bottom of the pile last year, though they are improving. Every single metric is improving for them. Uh, uh, like net interest margin is 2.63 last year, but now 2.71. Their loss was 6.37, but now 1.27. Return on asset. Their CASA ratio is just about the same. Their capital adequacy ratio has improved quite significantly. Net NPA is ballpark the same sort of range or slightly up, but they remain at the bottom of the pile of these 10 banks. But other observation is that as you will see between March 20 and March 21, in 1 year, the most banks have seen the pressure on their net NPA level, and that's a straight result of the COVID situation that we have seen. Banks had to provide for all the bad loans that they are expecting. So if you see in the March 2020, uh, out of 10, only 5 banks had issue in terms of net NPA. Now 8 banks have got issue in terms of net NPA. So that's a big change between last year and this year. So I seriously hope you like this video and the information that we have shared with you and the application, the 5 key metrics on the 10 main bank that we have shown for you has been helpful for you. If you have any comment on this video that we've just shared with you, then please do let us know through the comments. And again, once again, I would say that if you've not subscribed our channel A to Z Learning as yet, then please do subscribe our channel and become part of our viewers family. Thank you so much, and thank you for watching our video.